First thing I do with my portfolio is I have every asset by maturity date. Some people have it by city, some people have it by property name. I have it set up and it's sorted by maturity date. So I know when it's time for me to really start looking at properties. If I have a performing property and it's not maturing until 2029, I'm not worried about it right now, because whatever happens in the market, whatever cycles we're going through, and I have that fixed rate, I'm going to keep it all the way through and worry about that maybe towards 2027, beginning of 2028. Now, it's not to say that if interest rates plummet, and I know what that interest rate is when I look at that schedule, and I can see maybe it's 400 or 500 basis points lower, or 4 or 5% lower, then I would run those numbers for those long-term deals and see if it makes sense to refinance early. But in most cases, I do an annual review of my debt because I want to see, it's just because I'm a nut. I'd like to see how much interest I threw away by, owning and operating these properties. It's just one of my things. But you definitely want to review, one, what your debt service coverage is, which, again, where your NOI is. Am I able to distribute funds? So I like to do that on an annual basis. Now, within the last 2 years of maturity, I do it on a quarterly basis, because now I know I have to really start looking at interest rates. I need to start looking at whether or not it makes sense to sell. So I look at where cap rates are at that time. I look at any of the capital improvements or deferred maintenance that needs to be done at the property.